Thank you very much, Tim, and good afternoon, everyone. It's a great pleasure to be here and to present Openpay on today's Hidden Gems webinar. Maybe different to my colleagues here, I want to start my presentation with some recent news. We have only last week announced a $67.5 million funding package to support our growth strategy, comprising a new $25 million corporate debt facility, $37.5 million through an institutional placement, and a share purchase plan to existing shareholders of the company to raise another around $5 million, which has opened today. This capital raise followed a major partnership announcement, also early last week, outlining the collaboration agreement for the platform integration and merchant acquisition with a leading global payments provider. Immediate focus on the US and subsequently other existing and future Openpay markets around the globe. We have recorded over the last periods very strong growth in Australia, our home market, and in the UK, where we have launched into mid-2019. And we see now a unique opportunity, also supported by this funding package, to really accelerate our US, UK, and Australian expansion plans, and to focus on recent strategic partnership wins with aggregators to get us onto the next S-curve of growth and scale in our specialized verticals, Tim, which you mentioned, within target markets. Before we get to our international expansion, particularly focusing on the massive US opportunity for our differentiated Buy Now, Pay Smarter product, I want to briefly explain who we are and what makes us different. And please turn the page. Yeah, that's perfect. So starting there, what you see here is our two main products, which is really on the left-hand side, our Buy Now, Pay Smarter product. I think it's important to explain what this is, as we see an increasingly kind of crowded and convoluted Buy Now, Pay Later landscape with a lot of different kind of flavors of the same. What we do here is we provide a responsible and meaningful way to pay with our Buy Now, Pay Smarter product in business to consumer, which is typically larger in value, up to $20,000, and longer in duration, up to 24 months, compared to most of our competitors. Our product, importantly, is also interest-free, and there are no hidden catches and no credit card trap further down the track. We offer our plans in verticals, which matter to people, including automotive, healthcare, and home improvement. We have lately also launched into sports memberships and education. And we are here to help people absorbing bill shocks of unexpected and unexpectedly high expenses and empower them to take control of their cash flow. This has meant we have been able to carve out an attractive, increasingly recognized place for ourselves in what is otherwise a very busy, convoluted Buy Now, Pay Later market. And secondly, to that page on the right, with our first significant innovation on our flexible platform, enterprise merchants can now manage trade accounts for their business customers end-to-end using our B2B product, OP Pro, which is a fully digitized software as a service platform. As you may have heard, Woolworth are the first who have started using our product at scale, onboarding now, as we speak, thousands of their business customers onto our platform, and then transacting now in-store and online. And we are also very well progressing in converting additional B2B relationships onto this innovative, unique platform in the market. Over to the next page. Thank you. I want to highlight here the size of the opportunity in our target markets, particularly in the US, our second international market besides the UK. Looking at the addressable market size for Buy Now, Pay Later more broadly in the US, the overall purchase volume is around $5.5 trillion. We have been sizing the opportunity for our industry verticals, which we will focus on as we launch into the US, which is still a very significant niche of $830 billion, a really sizable opportunity. And particularly healthcare, our first target segment in the US, is not only one of the largest of these verticals, but one which has been desperately seeking for better payment options. When we prepared for this US launch, numerous practitioners in the US told us that neither credit cards nor other traditional consumer loans with their horrendous interest rates, nor the typical Buy Now, Pay Later kind of pay in four providers can really offer a good solution for what healthcare providers and their patients really need. So to bring to life what that really means, please go to the next page 5. And this is kind of the graphical illustration of our customers' needs. And as I said before, many of our competitors operate in this pay in 4 space, 4 fortnightly installments for 6 weeks or 2-month plans, providing what is essentially cost-free short-term credit for, I call it t-shirts and tennis shoes, in fast-moving retail, usually for very young people. Very, very convenient, but useful. Openpay is positioned as the budgeting tool to use for life's more important purchases and experiences. And importantly, you can use our plans across meaningful areas of your life: pets, medical treatments, your son's braces, your daughter's soccer club membership, dad's unexpectedly expensive car service, mom's evening classes in accounting, and first-time parents furnishing the nursery for their newborn. This is what we focus on, and this is where we are proudly empowering finance-heavy people to be smart about their money and spread payments over a longer period of time. This leads us to the next page 6. Thank you. This is, we have tried to be very, very clear and tangible in how we do it. This is our launch plan in the US with the 6 pillars of success. And starting on the left, we have really started with our initial focus on hiring some extraordinary talent in the US market to have manpower and credibility on the ground, led by Brian Schneiderman. I just want you please to switch to the next page to show the leadership team so far there. I started working with Brian mid last year in his capacity at the time as Deloitte's global payment practice leader to help us exploring our market entry strategy in the US. And Brian, having worked with numerous merchants in the US and globally to find the best payment solutions for their business, called me last year in October and said, look, I don't want to consult you anymore. And I asked, what's wrong? He said, you guys have such a once in a lifetime opportunity in the payment space here. I don't want to consult you anymore. I want to be part of the company. And he became our CEO in the US and our global chief strategy officer, and has with him, as you see here, brought a number of highly capable and passionate people to the company to now build out the product and get us into the US market. Please back to the page before. Thank you. To scale quickly, the levers 2 and 3 here on this page are incredibly important. We will not walk the street and approach a dental clinic here and a car dealer there to convince them of our product and do all the costly and lengthy technical integration work. Our growth strategy is fully built on strategic partnerships with aggregators, for example, in healthcare, veterinary service organizations who service hundreds of vet clinics and 10,000s of their patients, families, furry friends, if you like, or global payment processors who we integrate into as an alternative payment option, like Visa or MasterCard are integrated to be instantly available at their merchants' clients' checkout online and in-store. So making it really, really easy and seamless for the merchants to really switch us on and offer our distinct product to their customers. Importantly, also to lever 5, we have founded an Openpay Merchant Advisory Council in the US to engage with very senior business leaders and decision makers on getting the product right for the US, if you like, designed by US merchants for US merchants. And we have already very well-known individual senior people across our target verticals now on this council to get the product right and us into this market. And I guess they will choose, as we roll out our product across our verticals, what they have been part of from a design and customization perspective. Over to the next page, please. And just coming back, again, the next one, please. Thank you very much. Just getting back to our wholesale distribution strategy. A great example is our recently announced global partnership agreement with EasyVet, a leading practice management software platform. In Australia, our companies have been working together very successfully for many years with excellent results for their veterinary clinics and their patients, and for us to get a strong foothold into this very interesting and important health subsector. We have now extended our partnership agreement recently to the UK and the US and will integrate our product into their software to be available to their 1,200 practices in the US alone in due course, and then at the same time also into UK. We are also well progressed in negotiating partnerships in the US with dental service organizations to get broader in the broader healthcare space to start with, and then rolling out from there into the other verticals. Just very briefly on the next page, and what I started the presentation with, all this needs funding, and we have been fortunate enough in quite challenging market circumstances to secure the fuel for our growth engine to accelerate the execution of our global growth strategy in the US, but also in the UK and in Australia. And this gets us to the last page of this presentation. Thank you. Why do investors get long-term shareholder value from investing in Openpay? We have all reason to believe that our formula of larger, longer, and customized payment plans and our aggregator partnership strategy to build castle and moats for subsectors which we really focus on, that this has the potential for us to own whole industry verticals, where people do not only ask for a convenient way to pay, but undoubtedly pay in 4R, but for a lifelong partner for them to manage their cash flow smartly for life's important investments in their and their family's health, home, cars, education, etc. And these areas are widely untouched by most of our competitors, and they represent a niche, again, which is $830 billion alone in the US. As we continue to tick these boxes for the pillars of success in the US market, but more broadly, we are at the inflection point of our growth strategy and profile. And the share purchase plan, which has opened today for eligible shareholders, will close this funding round, which has really only one single purpose, which is growth. And this concludes my presentation, and now happy to take your questions. Thank you.
Michael, thank you. As an owner of 2 dogs, children with braces, and in private school fees, I understand exactly funding these purchases.
It's valid for everyone, absolutely.
Who pays? What's the business model in terms of who pays? You work with the dentist, you work with the vets, etc.
Yeah, that's right. We get as we create value for the customer or the patient and the merchant or the healthcare provider, we get fees from both sides. This is a great differentiator. No interest, as I said, but we get payment plan management fees and plan setup fees for very high value plans from the customer, and we get merchant fees from the merchant. And this leads to a very high market leading gross revenue yield. If you simply divide revenue by TTV of around depending on the season, between 8 and 10%, it gives us a great opportunity with operating leverage as we scale now to create the highest net transaction margin and profitability in the midterm in the market.
And what about the automotive market? I mean, they have generally provided funding themselves. So are they competing with themselves by using your product?
We have signed some very, very important partnerships recently in automotive, and I guess we will become the preferred solution in that sector. We have Pentana, Australia's leading car dealership management software provider, now fully integrated into our platform, and we have started rolling out already to their 2,600 car dealerships across the country. We have signed a partnership with Ford recently, and their kind of outlets across Australia, which is now also going live soon. So I think we really own that space, kind of with the same philosophy. We are here for people who want to invest in their lifetime in a meaningful way and be able to control their cash flows and spread repayments over a longer period of time.
And does that mean your user, the demographic, is very different to some of the other players in the market?
That's right. Our median age of our customer cohorts, and we are represented really from 18 to 80, but the median age is around 40. That's typically people, as you mentioned, their dads and the moms of families owning pets, investing in a decent lifestyle and using us as a budgeting tool. And we kind of cover a larger kind of range of lifestyle needs, but focus is really where it makes sense.
I mean, it really makes a lot of sense. Who are the competitors in the US, and what's your plans globally?
Look, it's a bit hard to call out what the real competitors are. I think we have quite a unique product. On the one hand side, we are customized and larger and longer than the Pay in 4, if you like. We are also differentiating from some providers of larger and longer plans, including buy now, pay later, but without these horrendous interest rates, and with a customizable product to the needs of a business. If a dental plan is 6 months, then we offer 6-month product. If it's 15 months, it's a 15-month plan. So that's really where we believe we have a unique opportunity in a very sizable niche.